back. Well, let's just get back and look at the screen where there's hardly any sign of a recovery. 11,251 on the Nifty with 30 points away from the lowest levels of the day. Let's now bring in another voice. Jonathan Schiessl, Senior Vice President at IIFL AMC, is with us in this leg of the show. Jonathan, thank you for joining in. We're all trying to make sense of whatever's happening, but it's just moving so quickly. What have you made of the extent of risk aversion that has swept global markets, including a market like India?
I think, it's fairly rational. I know everybody's, the size of the move has caught everybody by surprise. But the reality was, I think markets had been incredibly complacent. Everybody assumed this problem was a China problem, and that the world would carry on. And quite simply, falling bond yields have been doing the heavy lifting to keep equities propped up. But bond yields have already fallen massively in the US and elsewhere. And so I think, clearly now the problem's moved out into Europe, and it's causing significant sell-off, which, with the level of uncertainty and the difficulty to predict how long, what's going to happen, it was rational that investors have decided to take some risk off the table.
Jonathan, hi, good afternoon. We are dealing with some, very aggressive selling by foreign investors in India in last 4 days. It's almost 10,000 crores of cash market selling. Do you think it's largely ETF driven?
I think probably. I think yes. In the last few months, you'd certainly seen foreign investors pushing into emerging markets generally. I think there had been some initial pullback from the early stages of the virus and moving out of China. I think India had certainly benefited from a shift out of the likes of the Chinese markets into India. But I think now I would agree there's certainly some selling going on in the complex, which is obviously hitting India. And perhaps there might also be a little bit of focus dedicated to Indian selling as well in the short term because of the stuff we're seeing on the TV in Delhi, which causes additional friction.
Okay, Jonathan, looking at the way one can or perhaps should navigate a market like this, what's the advice for the moment within India? Do you see any safety zones?
Very difficult. I think when you get this sort of level of sell-off, you've just got to buckle down, and as your previous commentators have talked about, we'll get through it. And from a medium to longer term view, then things look a little different. But in the short term, when you've got such widespread technical damage being done, then there are very few hiding places. Value can help, but you're still, from an absolute basis, suffer losses as well. So it's in the short term a very difficult time to find any havens from an equity perspective.
Okay, so Jonathan, in India, what would be the kind of stocks that you will look to top up in this correction?
So I think the issue I guess comes down is it's very difficult to understand the impact that this virus is having on the global economy. Clearly, everybody's been talking about supply chains, but if you see this virus spread out, then there's and the behaviour of government and the lockdowns that go on, then businesses are certainly going to get significantly impacted. We're seeing some multinational companies already talking about issues they might have with guidance going forward and issues that they're already seeing from their China businesses with the impact of the coronavirus. If this spreads, then undoubtedly businesses are going to be impacted. So it's very difficult to sort of, in the short term, to try and find a hiding place, if you like, or areas you'd immediately want to start buying. But I think ultimately, you've got to be a long-term investor, and certainly for us, we remain focused on the financial sectors. We like that whole sector from an Indian perspective. And then also, obviously, the recovery that we were beginning to hope to see from an Indian macro perspective as well. So the domestic plays, particularly around some of the capital goods side, which it has been stressed. There is value there, but obviously it's waiting for this recovery. And that recovery, I guess what I'm trying to say is, could be pushed out a little bit further if the export sides gets a little bit more difficult.
All right, Jonathan, thanks a lot for taking this call for us. Thanks for joining us. That's the view from IIFL AMC. But, well, the market is still down and out. So we'll